Okay, good afternoon, everyone. I'm Jack Harding, and I'm part of the MGAA Next Gen Committee. And on behalf of the whole committee, we'd like to welcome you to our briefing this afternoon, which is discussing the history of the MGAA. This briefing forms part of our Next Gen Insight series, and follows on from the briefing we held a couple of weeks ago with the Insurance Museum at the end of October, which focused on the history of insurance. Before handing over to our presenters, I'd just like to run through a few housekeeping points, if possible. If we could all just please keep your microphones and cameras off as it is being recorded. If you'd like to ask a question, please use the chat button at the bottom of your screen. Your questions will be answered during the Q&A session at the end and will remain anonymous. If we do not have time to answer these, though, they may be addressed post-event should you provide your contact details. The MGAA's Programme of Learning and Insights has been accredited by the Chartered Insurance Institute for the quality of content and supporting materials, with CPD hours applicable if relevant to your ongoing professional development. The recording of this briefing will be available within your MGAA user account dashboard with the PowerPoint presentation to follow post-event. Finally, you'll be sent a feedback survey about the webinar. Please do take some time to complete this, which should only take no more than 2 minutes, and this allows us to deliver the best quality events to our members now and moving forward. So, today's briefing, the history of the MGAA, is hosted by myself and Kaj, our chair of the Next Gen Committee, and we're delighted to be speaking to Reg Brown, Insurance Museum and one of the founding members of the MGAA. We've also got Charles Manchester, who's the MGAA chairman, and Mike Keating, who's the MGAA CEO. Hopefully by the end of the session, delegates will be able to summarise why the MGAA was set up and what the intentions were behind it, describe the organisation's current role, aims and achievements in the market, and outline the future plan for the future of the UK MGA sector and how Next Gen talent will be there to continue the legacy. As I mentioned earlier, we will have some time towards the end of the briefing for some Q&A, so please feel free to submit questions via the chat box throughout the session. Can I just also ask if any of the speakers who aren't speaking, if you could just remain on mute until it is your sort of time to come in, that would be great. Without further ado then, I'm going to hand over to Reg for him to introduce himself properly and take us back to the very beginning of the MGAA.
Thank you for that, Jack, and good afternoon, everybody. I don't know whether you know that, but I retired from Lloyd's Underwriting in the year 2000, and so well into my retirement at about 2009, I was approached by two gentlemen, one of whom I see is listening today, Francis de Zulueta, at that stage an investor in MGAs, and a guy called Brian Russell, who was himself an MGA. And they asked me to help them form a new trade association for managing general agents, or delegated underwriters. We hadn't settled on a name at that stage. But I sort of listened to what they had to say, but I was pretty reluctant at the time because my view was that we had far too many trade associations already in the insurance business, and why would we need another one? I thought we had too many anyway. But that was when it all started. And why? Well, at that stage, a well-known delegated underwriter was losing vast sums of money for its capacity, its capital. And the press were having a field day criticising the whole subject of delegated underwriting. It seemed that they couldn't answer the bad press, and they needed a voice to help them. So I thought about it carefully. I spoke to Lloyd's and the ABI and said, what do you think about the idea? Do these people need a voice, and do we need another trade association? And eventually I convinced myself that there was a need for MGAs to have their own voice and to explain their raison d'etre and why they should continue to exist. So I went about it by forming a small steering committee made up of MGAs and interested parties. And we started to meet in Brian Russell's office in Leadenhall Street. And we considered where to go from here. We wanted to move the project forward. So the early discussions circulated around who would be interested in a new trade association. And of course, MGAs themselves would be interested. I argued strongly that the insurers should benefit from improved standards within the MGA community, and therefore they should be interested. And of course, there was another group of interested parties, the suppliers, who wanted to make the service providers, who wanted to make money out of the MGA community. So those were the three classes of interested parties we identified. So I spoke to Sue Langley, who was then high up in the echelons of Lloyd's, and who incidentally is the next to be Lord Mayor of London. And Sue kindly allowed us to call a meeting of MGAs in the old library at Lloyd's. She also agreed that we could call a meeting of the service providers on the 11th floor of Lloyd's. And Clyde & Co. agreed that we could hold a meeting for the insurers in their offices. So we had all three parties consulted. The old library meeting of MGAs was quite interesting because we had about 80 representatives turned up with representing about 60 firms. And at the end of that meeting, we decided that there was a growing interest in the idea, and about 40 of those 60 firms said immediately they would join. The insurers and service providers weren't quite so enthusiastic, I'm afraid, and they weren't totally dismissive. But we had a bit of work to do to persuade them. But by then we were confident enough to form a limited liability company, which we did on the 16th of October 2010, and we appointed a fully fledged board of directors the following August. At that stage, of course, we had no money to do anything. So we had to work out how we're going to get money. How much are we going to charge each member? Well, we worked out that the service providers should pay most because they're going to benefit from the profits they're going to make from it. The insurers should be pay a bit more but they're going to benefit from it. And the MGAs themselves, most of whom were quite small businesses, didn't have the kind of money that the other two member categories had. So I was fortunate enough at that time to know somebody, one of my old contacts, Jane Comerford. Jane was a former broker with Nelson Hurst, and I knew she was looking for a part-time job because she was training to be an advisor for Childline, and was looking for 2 or 3 days of work. So Jane agreed to take on the task of ringing around those 60 firms who attended the Lloyd's meeting and try and persuade them to sign up. And she did it on a pro bono basis, but I agreed that she should take a share of the subscriptions at the time. It was the only way we could get going. So Jane was paid by sharing the subscriptions, and she did an excellent job. She did a brilliant job. We began then to issue things like press releases, talk to the press, convince the press that MGAs weren't such bad people after all. And they started to give us a decent press. They started to listen to what we had to say. So the reputation of MGAs improved considerably. And at the steering group level, we had a great leap forward when another mate of mine came back from Australia. Keith Stern had been acting as general representative in Australia. And he returned from Australia to fulfill a role in London, which I'd always argued with Lloyd's they should fill. And that was a general representative for the UK market, along the lines of the foreign countries where they had general representatives. Australia and New Zealand, I became very friendly with the general reps when I was responsible for the Australia-New Zealand subcommittee. But we didn't have a voice in London for the UK market. So Keith Stern came back from Australia to fulfill that role. And he joined the committee strange away, the board. And at least we had somebody in Lloyd's to look after our interests. And during that development stage, we had several visits from our American counterparts, the AA MGA. Bernie Heinz, an American lawyer, led the AA MGA and came to Lloyd's on an annual basis to introduce his committee to the chairman and chief executive of Lloyd's. So we had several meetings with them, and they were good advisors. We couldn't do what they do. Lloyd's looked at them as being a sort of regulator of MGAs in America. But we had our regulator, Lloyd's itself. We had the conduct authority and so on. So we weren't going to be as tough as the AA MGA on their membership. But as the membership grew, we kept on thinking one day we will appoint a chief executive. We need somebody to run this organization. And as we got more members join, I turned once again to an old contact of mine, Peter Stadden. Peter I'd been in touch with since he left BIBA, and he and I had shared many a lecture platform on the conference circuit, and I knew him pretty well. And the problem was we couldn't afford him when I first started having a conversation with him. He was too well paid for us. But eventually the situation came about then that we could afford him. And so we finally in 2015 appointed Peter Stadden as a chief executive. And so with Jane Comerford by his side, Peter moved on the MGAA and moved it on in leaps and bounds, quite a pace. He carried on for another 4 years to be replaced by your current CEO, Mike Keating. In 2016, I'd been at it for sort of 6 years. It was a time when I decided I was doing too much and I needed to step back a bit, and I gave up 2 of my big responsibilities. One was a charity called The Brokerage, and the other was stepping down from MGAA. I was convinced by then that it was in good hands, that I had fulfilled my obligation to the 2 gentlemen who asked me to help them form a trade association a few years previously. So I stood down then and I handed over to your current chairman, Charles Manchester, another old contact that I've known for years. So that's how it started. That's how it came about. And I'm delighted to be able to congratulate Charles and Mike on an excellent job, doing extraordinarily well. And well done the MGAA for getting to this position. So that's enough from me. Over to you, Charles. And Mike.
Thanks, Reg. That was very enlightening. Going back to the very early days when you didn't even have a room to have a meeting in on your own. But yeah, I was there. I was a founder member. I remember that meeting in the Lloyd's Library. It was one of the biggest and most contentious things at the time. Was trying to define what an MGA is.
Yeah.
And I think it's still difficult. And I remember, I think the FCA asked us last year what the difference between an MGU and an MGA is. And around the MGAA boardroom table, there were different views.
Yeah. Well,
so try explaining that to a regulator.
Yeah. Yeah.
But I think we broadly got there. I mean, one of the other issues, of course, was with the membership was whether we would admit brokers with binders.
Yeah.
And I think they are definitely not MGAs. And I think it was felt quite strongly amongst most of our membership that we should limit ourselves, as the name suggests, to what most people would see as an MGA. And you're right. I think I first came into insurance in the early 80s. And back in the 80s, there were one or two quite spectacular failures of MGAs. And they not only caused a lot of upset and everything, but they also sort of tarnished the name. And I think there is still a sense that there's a very broad church of MGAs. At one end of the extreme, you've got businesses that really just focus on distribution. And it makes sense for them to have delegated authority, but they probably don't add any underwriting insight or anything else. So they don't create their own wordings, they don't do the pricing, but they do distribute. And at the other end of the extreme, you've got MGAs that do all of the above, that do have underwriting insight, that produce their own rates, have their own actuarial support, and manage their own claims. And then there's everything in between. And I can tell you, having spoken to a lot of MGAs over the years, some of them are less in touch with their underwriting results than you would think. And others are really very, very good. And we still have this broad church. And we still have, I think, what has changed in latter years is, of course, that regulators forced the market to be that much more professional. But I think insurers are also so much more demanding of data that I think the days of poor quality MGAs, if not numbered, the number of poor quality MGAs is really becoming a much smaller proportion of the whole. And at the same time, the number of MGAs out there is growing exponentially because people have suddenly discovered that actually it is a way not to be caught up in the civil service that some large insurance companies can be, and also perish the thought, to make some money for yourself, which a long career in the civil service is unlikely to achieve. And so the number of MGAs has increased a lot. I think insurers quite like MGAs because they're a quick way of getting into a market. They're also, if they are so inclined, a relatively easy way of getting out of the market, although they have to think about the runoff, but it's not as expensive as doing it themselves. And so insurers quite like us. And I think the underwriting results from MGAs, whilst some of them have been brilliant and others less so, I think that the general direction is positive. The other thing that I think really changed with MGAs in recent years was COVID, because there were all of these apocryphal stories, some of them true, of insurers switching off their telephone lines and things like that, whilst the MGAs stepped up to the plate, because MGAs are inherently entrepreneurial and they don't have large balance sheets. If they don't make any income, they don't pay the bills, they don't pay the salaries. And so they really stepped up to the plate, and the service from MGAs was just fabulous. And you talk to brokers even now, and they don't forget that period when they couldn't necessarily communicate at all with insurers, but they could definitely communicate with MGAs. And there were sufficient numbers of MGAs as well, but with sufficient capacity. I think, Mike, what is the premium income of MGAs we reckon at the moment of our membership?
So our members, good afternoon everybody, our members sort of currently underwrite in excess of 14 billion BWP.
And that excludes overseas premium?
Yeah.
Well, that's just UK premium income.
UK and Ireland, sorry, UK and Ireland.
Okay. And so they're a big chunk of the market, and it's not going to get smaller anytime soon, I don't think, anyway. even during hard market cycles, the number of MGAs hardly reduced at all, if at all, and carried on underwriting. And so there is a real value to them. We were, I think, desperate in a way for a trade association. As Reg said, back in 2010 or 11, it's turning up a meeting at the old library. And that implies quite a few others that couldn't make it as well. And that would be a very large proportion of the MGA community back then. And now there's so many more MGAs, of course, as well. And so it's an extraordinary feat to get it off the ground. We desperately needed to have a trade association that could communicate, as Reg said, with the press and things. Anyway, I had to follow Reg. There was a brief interlude of James Geary before me, and then I had to follow Reg as a chairman. And that's a hell of an act to follow. His reputation in the insurance industry is just phenomenal. So the best thing I thought I could do was get other people to do it, and just not do it myself. And eventually, as you know, Mike Keating joined. The number of members has grown and grown and grown. And the number of supplier members who may well have been reluctant at the beginning, I can tell you they're not now. There are lots and lots of supplier members. There are quite a few insurer members, wholesale brokers, and market practitioners, as we call them. But the number of MGA members is how many now, Mike?
But as of probably today, we're close to, depending in terms of who's going to be approved, we're close to 230.
Which is, again, extraordinary and quite a high proportion of the whole market, I think, as well. You've got some massive MGAs and a handful of massive MGAs that write $1 billion or more of premium themselves, and an awful lot of medium-sized and smaller MGAs. So what have we done in the years since Reg stepped down? I think the big issue for MGAs, the ones that keep us awake at night, is having capacity, because it's not unknown for a capricious insurer just to pull all of their binders overnight, regardless of underwriting results. And the one-sided binding authority templates let them get away with it. And so that's something that, as an association, we've been banging on about behind the scenes quite a lot over the years. I think the ownership of intellectual property is another important thing that isn't adequately addressed in binder agreements. Binder periods is a big deal as well, because every year, no sooner have you renewed your binders than you start thinking about the next binder renewal, if it's an annual deal. And so nowadays we're seeing many more long-term deals, even open-ended binders with no end date, just a notice of cancellation period. And so I think those are the things that really keep us awake at night, and that you need a strong trade association to work on, and it won't be achieved overnight. The other thing that I think we've achieved is getting our regulator to understand a bit about what we do, even though we can't tell them the difference between an MGA and an MGU. I think if you ask anyone senior at the FCA now, they probably have heard of MGAs, and they know what we do. And that is quite important, because there is no separate pigeonhole of regulation for MGAs. So consequently, we were initially treated like brokers. And of course, nothing could be further from the truth, because our principal fiduciary responsibility is to the insurers that back us, rather than anybody else, whereas a broker's principal responsibility is to the buying customer. And so when we're regulated in the same way as brokers, sometimes you can get a conflict arising. We're not out necessarily to get our own pigeonhole. There's not that many MGAs compared to the number of brokers, and one has to be careful what we wish for. But I think it is important that the FCA does understand the difference between MGAs and brokers, and is sensitive, if you like, to it. And I guess one thing that's always created a lot of hot air around the table at board meetings is discussions relating to unrated or poorly rated insurers, which I won't go into the detail of it now. It's self-evident that they're an issue for good or for bad. The other thing that I think really sticks out is, of course, in talking about the need for capacity, we now have regular capacity exchanges where insurers come and present opportunities for MGAs to talk to them and start relationships. And the recent one a couple of months ago was really well attended, not only by MGAs, but by insurers too. And to a lesser extent by placing brokers that place binders. And that is so pleasing to see. And when you talk to them, they tell you that actually they are making new relationships here. The other thing that has really changed, I think, over the years is the annual conference, where we're regularly now getting in excess of 1,000 people attending. And that just shows the status that MGAs now have, that insurers are so interested, that suppliers are so interested. And I think it's also testament to the hard-working executive, that's Mike and his team, because these things don't happen on their own. They don't happen because non-executive chairmen or directors make them happen. They happen because the team makes them happen. And we're enormously grateful to them. And of course, we now have rather more resources than Reg will have had back in 2010. And so we're able to deliver so much more. Not enough resources, I can see Mike grinning there, but certainly better. So I'm going to pass over to Mike now, who's normally not as quiet as he has been for the last 5 minutes, and invite Mike to add to my pearls of wisdom.
Yes.
Mike, can I just jump in there for a minute? Charles,
Yeah, sure.
you reminded me very much of our first meeting with the Financial Conduct Authority. We trooped on down to Canary Wharf. So four or five, six of us, something like that. And they'd only just been formed. And they only had 10 employees at the time. And on the panel, there were 8 of them. So I said, good grief, we are so important that you turned out 80% of your staff to help us. So thank you very much for that. But that's just something I remember. That was a great bit of fun we had. Mike, sorry.
No problem, Rich. It's a very interesting 80% of FCA.
You would not want 80% of the regulator turning up now, I can tell you.
No, you wouldn't.
There wouldn't be a room big enough.
No, it'd also empty half of Stratford if that happens, so there you go. Charles, thanks for that. So I suppose where I would add a bit of colour when I joined in 2020, sort of, and it was actually during COVID, which was challenging for anyone who sort of took on a role in during COVID. But one of the first things I wanted to do, and we've done that twice in my tenure, is that we are here clearly for all our members. So what I wanted to do when I joined is to create a baseline in terms of the current membership, in terms of what the association was doing well, what it was not doing so well, what more should we be doing for our members, what were their priorities. And this is all linked to the fact of where does the priorities of the executive team and therefore the members' money, because we are not for profit, where should that be focused in terms of that development. So on that basis then, having done that research, comprehensive research in 2021, and we also repeated that in 2022-23, that gives us a strong base to be actually to communicate with all of our members and saying our priorities and where we are investing your money is exactly where you're telling us to do it because you're responding to research. So that has allowed us to do a number of different initiatives, which I'll come on to in a minute. But I wanted to pick up very much on Charles's point around capacity and capital. You know, when I joined, and having had experience of deploying capital when I was at AXA, and actually be a recipient of capital when I was running MGAs for sort of nearly 15 years, that point of having the association, having a broad church of capital, I felt was absolutely critical when I joined. And as an executive team, you know, we're particularly proud that we now have 65 insurer members, and that continues to grow because, picking up on Charles's point, you can still be delivering underwriting profits consistently, but an insurer change at the top may just come in and say, I don't want to deploy capital. We want to do all that ourselves. And therefore, immediately, we would hope that our MGA members would come to us and see that there is a wide choice of insurer members who will be looking to actually engage and to partner. So I think there was around 27 insurer members when I joined 4 years ago. And as exec team, you know, we've given that to sort of 66, I believe it is today. And that's fantastic. And that's something we will always focus on as an association to ensure that we've got that broad spread of capital from that perspective. So capital provision, very important. But if I would just briefly touch on in terms of strategically, you know, and I like to describe the association around 3 pillars effectively. So the first pillar, which Charles has alluded to, is around our network of events. So we have our conferences, we have our capacity exchange. We will have 2 broker exchanges in 2025. You know, the one we held in London in March of this year, we had pretty close to 700 delegates at that. And 90% of our membership, MGA membership, deal with the broker community. And you hopefully would have seen the recent announcement of our sort of closer affiliation with BIBA, which actually is great for the association and also great for our members in terms of dealing with the broker community from that perspective. So we have a whole host in terms of that network and events thing, some large, some small. We do some bespoke stuff with members where they want to test their strategy, you know, with some of our MGA members, which we've done successfully. So that's a key pillar and something, you know, we'll continue to work on and continue to expand. The second pillar is something which, you know, again, we're very proud of and something we will continue to invest in. Is something Jack touched on at the introduction, is our program of learning and insight. You know, as a trade association, you know, we have to be relentless in ensuring that, you know, that program, be it around compliance, technical underwriting, technical claims, personal lines insights, connect to Lloyd's, absolutely critical in terms of improving the professionalism, education and knowledge across the whole MGA community. And that includes our supplier membership as well, because they have great value and great insight in terms of what they do to share with, you know, MGAs and insurers. So that sort of pillar, again, is something which, you know, we're very proud of and something we will absolutely continue to invest in terms of what our members want. And then thirdly, it won't surprise you, again, the other pillar is the fact that, you know, we are not-for-profit trade association. So our members' voice and our association with our peer groups has to be strong. We have to have, and we do have, an excellent relationship with Matt Bruce and his team there. You know, Matt will probably do 2 open mic sessions with us in 2025. You know, they're well attended, both online and in person. And we've also built up a good relationship with Lisa Spurley, who's the market intervention sort of manager, and she actually did an excellent presentation at our conference in July this year, and we'll also have a regulatory session in our conference at 2025. So looking forward, you know, I would say it'll be more of investment in what we're doing around those 3 pillars. If you look at the program of learning insight, we've just recently introduced an operational insight, because we know that as an industry, we sort of duplicate a lot of things between the value chain, be it an MGA, an insurer and sort of brokers. So we're looking to actually explore that operational piece to say, how can we remove frictional costs? How can we become more operationally efficient as a community to provide more time in terms of looking at new product development, more time in terms of dealing with broker or whatever distribution you're on. So that's something we'll do. We'll also, again, schedule this year to go back out to our members in terms of our comprehensive membership research. And again, that will inform us, as an executive team, of what our members want us to be doing in 2025 and 2026, and where we should be deploying members' funds in terms of that investment. So I'll sort of pause there, if I may. Hopefully there'll be some questions a little bit later on, but hopefully that gives you a sort of snapshot in terms of what we've done, or sort of in the last 4 years or so in my tenure, alongside with an excellent executive team, and what we're looking to be doing in the future. Just finally, building on Reg's point around sort of small beginnings, in total, across all our 3 membership tiers, we have in excess of 420 members. So from that 40, we're now up to over 420. So it just shows what has such a strong community we have as an MGA. Thank you.
Thank you, Charles, Mike, and Reg, for your insights. It's so interesting to hear everything you've told us so far this morning. And it really feels like everyone here is at the right place at the right time. The MGA sector is obviously booming. So NextGen, so everyone here should be aware of NextGen activities. And if you're not, please do give us a follow on our LinkedIn page. The NextGen committee is here to represent the interests of our community and drive forward MGA initiatives. So if you haven't heard about some of our initiatives, I'm just going to go through a couple of them today. Like Mike said earlier, we do seek feedback from our members, and then we try and develop our program of learning insights and stuff from there. So one of the things that we had heard from our members was that, MGAs are very niche. You're very much in your day-to-day roles, and you're learning constantly about what you're doing, but you don't know, for example, what another MGA might specialize in, or, how they go about their business. And I think it's good for us to learn from each other. So we have our insight series where we delve into different sectors of the MGA, different MGAs, and see what we can do to learn from each other, basically. So do come along to those events. We also listen to our members in the sense that a lot of the day-to-day running of compliance functions or claims functions, tech functions would be by more junior members of the team. So we have recently started our coffee collective, which is kind of an informal forum, just so that younger people in our membership can get together, learn from each other, discuss common trends, any issues that they might have that, they might be a bit shy in asking their peers on. Please do come along to these events. And if you've got an idea for a future one, please do let us know. We held one on accounting and finance recently, and our next one is on legal and compliance in December, which with many more to come throughout 2025. So get involved with that. Obviously, the MGA sector is very niche. How do we see the future of the UK MGA sector from a next-gen perspective? Well, nobody can deny that MGAs continue to challenge the old-fashioned, it's always been done this way approach of our industry. And, with innovation and technology, we're sure to go from strength to strength. MGA's nimble nature really allows us to reassess how we're doing things. If something's going wrong, it can be quickly fixed and made better. So I think that's definitely one of our major strengths. Client demands of stronger insurance products will continue. As Charles touched upon, during COVID, MGAs were really looked upon to provide specialist and niche services for clients, and insurers really relied on us to provide that and get to the bottom of things very quickly. One of the trends that we are seeing in MGAs is that there's definitely more fragmentation. So where people used to just specialize in a cargo MGA, for example, or a renewables MGA or a cyber MGA, there's a lot more niches within those particular sectors that we're seeing. And MGAs are, sharing that pie more greatly, which I think is great. Obviously, the relationships will continue between capacity providers and brokers. And one of the NextGen's focuses for next year will be to partner up with the LMA and BEVA to have cross-industry events where we can really learn from each other and propel our industry forward. So please keep an eye out on our page for all details of those events. And we can't really deny that regulatory changes are going to come. But one of the things that we have seen is that MGAs do embrace those regulatory changes. You know, we're more nimble in our nature, so we can address any challenges and have a closer relationship with our brokers and our end customer to demonstrate, you know, why these have come about and what we can do to demonstrate these to the regulator. And I think the regulator really appreciates how quickly MGAs are doing that, and how, you know, even with less compliance resources, they are really taking the bull by the horns there. So what can companies do to ensure the future of our sector? Obviously, nobody can deny there's also a talent gap in our market. And there's a lot of talent, but like there's a certain, how do I say this without offending many people on our call? A lot of people are going to be retiring soon, and fairly so. So I think we need to encourage our next gen members to, you know, learn from them through our mentoring scheme, for example. So if you haven't joined up to the next gen mentoring scheme, please do. Either as a mentor or a mentee, like there's a lot to learn from each other. So please do come along to those events. Even if you can't be a mentor long term, we do host speed mentoring events, so you come along to those as well. And I think Francis came along to our one earlier this year, so thank you for that, Francis. Another special mention to you. And then, yeah, I think we just need to upskill our staff and don't be risk adverse when it comes to hiring far and wide. You know, there's a lot of people who are looking for jobs that aren't just from an insurance background. You know, a lot of us fell into this, and I think we should be giving opportunities to people outside of the sector. I myself, for example, come from a legal background, and I know many people. I know pharmacists that have come to insurance, or I know mechanics that have like fallen into insurance. So think far and wide when it comes to hiring from a wide talent pool. Conscious of time, and we want to have some time for questions. So shall we dive into questions, Jack? Do you think now's the right opportunity? Sorry if I had that.
No, not at all. Thank you all very much for taking the time out to come and sort of contribute to the session. We have had a couple of questions come through, so I'll open this up to the floor. The first question we've had in is, what advice would you give insurers to differentiate the spectrum of MGAs that Charles spoke about?
I think insurers will very quickly work out what kind of MGA they're talking to, in that the initial early conversations will, if it's a pure play distribution play, that's what they'll be talking about, and the MGA will have to explain to the insurer what they need from them. If it's the other extreme, then I think they'll quickly work out that actually they're getting quite a lot of underwriting insight from the MGA. There are issues for insurers with both ends, because I mean the full service MGA that handles claims, for example, if in this current regulatory world that we live in, an insurer delegating handling of claims is a big deal, and they need to watch very carefully and audit and oversee very carefully. And so it's not so much advice to insurers. They'll find out pretty quickly. They may be surprised at which end they prefer to deal as well. A lot of insurers start off like regulators did, treating MGAs like brokers, when in fact most MGAs aren't, just brokers in disguise. I turn it the other way around, actually, with insurers. One of my throwaway lines is always that we're all MGAs, because insurers at the end of the day are just custodians of capital, and some of them don't handle it very well at all. In fact, a lot of them destroy capital. And so at the end of the day, the two ends of the distribution chain are capital and customer, and we need to think of those a lot more than perhaps we do.
Did anyone else have any? Thank you, Charles. Did anyone else want to come back on that one? Or? Okay, Francis, thank you for your question. So Francis noticed that there's currently 77 Lloyd's syndicates, whereas 420 MGA members, albeit I think 230 odd of those are actual MGAs. I think that's right, Mike. So with that in mind, Francis asked, do we think that Lloyd's should give a floor to MGAs so that we can get back to the old Lloyd's, which had some 400 syndicates in the 1980s?
I think if it's a floor for MGAs, then most recently, I think Rockstone took a box in Lloyd's, I think, which is one of our members, part of the Eventum group. CFC, obviously a mega, if you want to call them an MGA, I think they have their own syndicate in Lloyd's. They write a proportion of their own portfolio. I can't think of any other MGAs currently of members who are present in Lloyd's. I'm just trying to
Mike, I think Penn Underwriting have just opened a box as well.
Okay, thanks, Charles. Yeah, that's right. So that's 3 within our 230 plus MGA members. Half of those are Lloyd's cover holders. Okay, they won't necessarily be exclusively Lloyd's capital because they'll have some. Most of them have sort of company paper as well. So I think Francis and I have spoken about this in the past. Actually, I think it's an aspiration to say that Lloyd's could do that. We have an excellent relationship with Lloyd's. Paul Brady now sits on our board. Which is fantastic. And there's also the other argument is that which I know Francis has spoken about, should the trade association have been actually Lloyd's, be on the floor in Lloyd's, which I can say that we probably would like to do that, but it's rather expensive actually to be in Lloyd's. So that would be a no currently. So hopefully that answers Francis' question, Jack.
Brilliant, thank you. Sorry, go on, Reg.
This is an old chestnut from Francis. He and I have spoken about this over many years. He thinks that Lloyd's should be just an MGA community. My question is, why do we need Lloyd's? What? I mean, most of it now is corporate capital. Why are they there? What do they need that expensive building for? And because half the building recently was empty. I don't know how they're doing now, putting tenants in. But I mean, with technology being what it is, how much underwriting is actually done in Lloyd's? And is the face-to-face market going to survive? I don't know. In my day, I loved it, but it's all changed now. Come on, Francis, where's your answer?
I think we still love it. Don't worry. I think the market will continue to be based upon those face-to-face relationships from Tuesday through to Thursday.
Brilliant. All right, thank you. Okay, a couple more questions come through. What would the panel highlight as key positives for moving into the MGA community as a career option for emerging talent?
I'll pick up a little bit of that, and I think there is, and our insurer members actually talk to me about this a lot. There is a drain from insurers into the MGA community. Part of that, Charles picked on the fact that entrepreneurial underwriters firstly feel they have more freedom to deploy their skills in an MGA than they will in what Charles sort of affectionately called perhaps a civil service sort of type structure. Secondly, and this is the same in the UK and in Canada and in the States where we've got good relationships with sort of sister associations there, it's the opportunity to create more value. So, so people can create more value for both the business and themselves personally by potentially moving into the MGA sector. And you'll see a lot of very, very talented underwriters, frankly, being well trained by insurers and then basically moving into the MGA sector to actually deploy their skills and their expertise. And I don't see that. And I think, to be fair to insurers, they don't see that sort of trend reversing anytime soon. So that would be my observation.
Yeah, and I would definitely echo that. I think what I've seen with a lot of people in the market is you're almost put into a box when you're in a larger company, and where you're within an MGA, you get to learn a lot, you get to develop your skills, you get to see what everyone else is doing, and it's a lot more rewarding. Like, you're much closer to the reward. You can see what the next step in the chain is, and you can see a project run from start to finish and really get that job satisfaction that you might not necessarily get in a bigger company where you're doing something quite repetitive, for example.
Agreed. All right, thank you both. Charles or Reg, anything to add or come back on that question?
I think we're all going to come up with variations on the same thing, but the thing is that in an MGA, once you get over the things that I mentioned earlier that keep you awake at night, it is almost refreshing that what you do makes a big difference. There's nowhere to hide, and you make a massive difference. And brokers, particularly since COVID, have voted with their feet. And I think something that has changed, that I think Reg said he couldn't predict the future. Well, I think I'm going to be a little bit bold here and say that actually the only thing that's stopping Lloyd's becoming redundant probably is licensing worldwide. And that's a regulatory thing, and it's a regulatory limitation. And the only thing that is keeping insurers as the insurers that we know is the inability for capital to get authorization to write business without having some sort of a wrapper that is an insurer or a Lloyd's syndicate. And you've got to believe that in the next 10, 20, 50, 100 years or whatever, the hurdle of regulation is, or somebody's going to sort this regulation out that allows people to trade globally without having to have 197 different licenses, and will enable capital to get to the risk quicker than having to go through a large insurer or through Corporation of Lloyd's. And so I think that is probably a fundamental change to insurance that is likely to come. Probably not in my lifetime, but you never know. But why is it a good place for people to be? Because it's innovative, it's exciting, and I think a lot of the developments are coming within MGAs now rather than within traditional insurers.
Sure. Brilliant. All right, thanks, Charles. Probably got time for one more. So we'll go with okay. When did delegated authority underwriting sort of first emerge or first come about in the market?
Well, as chairman of the Insurance Museum, let me try and have a go at that. I know that we were approached recently from somebody from the reinsurance community who asked us, when did binding authorities first come about? When did delegated underwriting first come about? They were trying to do some research. And they've spoken to Lloyd's, and nobody at Lloyd's could give them an answer. I cast my mind back to the turn of the 1890s and 1900s, that sort of period, when British insurance companies ruled the world. There were major insurance companies, and we can reel them off, hundreds of them, and North British and Mercantile, for example, there's one that had an office in America and suffered greatly from the 1906 Los Angeles earthquake. And most of the British insurance companies had offices in America at the time. Whether it was delegated underwriting, some of them I think had their own offices, but some of them appointed agents. And I came to the conclusion that when Cuthbert Heath, that famous instruction in 1906 to his agent in America, pay all claims regardless of wording, he was telling his delegated underwriter to pay the claims. And I think the agent he was communicating with actually had underwriting power. I can't prove that, but that's what I think. But because that one act from Couplet Heath actually cemented Lloyd's reputation in America, and it's lived off the fat of that land ever since. That's my sort of feeling, that delegated underwriting has been around for an awful long time. And in the 70s, when I joined in Lloyd's, they were just simply called binding authorities. But there's very little regulation about them. You could give a binder to a cuckoo if you wanted to, and Lloyd's didn't care. But now they care a lot. And that's the change that's taken place.
Brilliant. Thanks, Reg. That's a lovely little anecdote, I think, to end on, given the time. So thank you to all of you today for taking an hour out of your day to come and join the session, and to all our members that have joined, thank you for joining, and please do take a couple of minutes to complete the feedback survey that we'll be sending shortly after, as we really do appreciate all your views and feedback. So just to say thanks again to Reg, to Charles, to Mike, and to Kaj.
Thank you very much. Thank you.
Thank you, everyone.
All right. Have a good afternoon.